Dude, check this out. I just got paid a dividend of £80 for doing absolutely nothing. Oh, what? That's sick, mate. I know, right? Wait, what's the dividend? What's a dividend? Well, let me explain. Hello and welcome to another video. My name is Exo, and in today's video we'll be discussing dividends. Now, this one was requested by a viewer of the channel, so thank you very much for this suggestion. If you have any videos that you want made, just leave them in the comments down below and I'll see what I can do. So the first thing you need to know is, what is a dividend? Now, a dividend in simple terms is a sum of money a company pays to its shareholders. It's important to note that not all companies pay a dividend, and each company will pay a different amount. The board of directors are the ones responsible for choosing if the company will pay a dividend, and they will also determine how much that dividend will be. When they choose how much they're going to pay as a dividend per share, then a dividend yield will be calculated. Now, the dividend yield is just a translation between the dividend per share and the share price of that company. This just determines whether the company pays a high or low dividend in relation to its share price. So let's break that down. Okay, so here we have two companies, Coca-Cola and Microsoft. Both are dividend paying companies. However, you have the stats down here. Okay, so Microsoft pays a dividend of $2.30. It has a yield of 0.81%. It has a payout ratio of 24.89%. And the share price at the time of recording this is $305.99. As opposed to Coca-Cola, who pays a dividend of $1.66, has a yield of 2.73, payout ratio of 81.71%, and a share price of $60.97. So as you can see, you get much better value in terms of dividends from Coca-Cola than if you invested in Microsoft. Now, obviously we're not taking into account growth in this example, so just bear that in mind. You can see there that I talked about payout ratios. Now, payout ratios are just a representation of how much profit has been used to pay the dividend. So the higher payout ratio, the less free cash flow there will be, and the lower the payout ratio, the more free cash there will be. So Microsoft in our instance has a very good payout ratio, whereas Coca-Cola has quite a high payout ratio. This is just something to bear in mind when you are researching dividend companies. Okay, so you might be thinking, why would a company even choose to give away money to its shareholders?
Congratulations, you played yourself.
Well, a company has two choices when it comes to profit. They can either keep it, reinvest it into the business, or they can pay it out to shareholders in the form of dividends. Okay, so there's something known as the life cycle of a business. Now, this just goes through the different stages of where the business goes. So you start at the startup, then you go to rapid growth, then you hit maturity, and then you can either go to rebirth or death. Now, dividends are generally only given out when a company has reached the maturity phase. This means that they can't really grow anymore, they're very stable now, they've just not really got many places to go with their money. Examples of mature companies are things like 3M, Coca-Cola and Microsoft. They're not going to go anywhere anytime soon, everyone still consumes the products and uses them, so they're kind of just stuck where they are. Let's be honest, as investors, all we care about is making money. So why would you choose something like Coca-Cola, which has low growth, over something like Tesla, which has much higher growth?
Why? Why? Because we fucking can! Because we fucking can!
That is a big reason why companies choose to actually pay a dividend. It's a way of enticing investors. If they can give you money that you do absolutely nothing for, they just give it to you as a reward for holding that company and staying with them, then that is what they will do. They look to increase this dividend year over year to keep investors satisfied so they can keep using their money to fund whatever they're doing. Okay, so what are the advantages to dividend investing and why do people like them so much, including me? Well, the biggest one is the snowball effect. Let me show you. Okay, so I'm going to use this dividend calculator to show you the snowball effect. So if you just invest 1,000 and then every year you'll put in £1 extra, because I tried to put a zero, it wouldn't allow me, so this is what you got. The contributions you are putting every year, the annual dividend, we've took 3M, so 3.75 if it's yield, the tax rate is left as standard, the dividend paid out every quarter. We're going to say no reinvesting of the dividends first, then I'll show you that. The annual stock price 6% and a 40-year timeline. So you can see the breakdown here. The principal you put in was 1,000, you added 40 quid. The amount of dividends that you would receive is 4,651, and this is what you'd end up with from your first 1,000 after 40 years. It's not bad considering you didn't do nothing. If we then reinvest those dividends, this number jumps up even more. This is because those dividends were not being used. However, if you reinvest them, then you're able to buy back more shares. When you buy back more shares, that then pays you out more dividends next time. You buy more shares, and that pays you out more next time, and it just keeps bouncing back and forth like that. And the higher these numbers go, the quicker the compound effect takes place. The longer the timeline, the more it takes place as well. If we actually contribute to this portfolio, so if we do something like 12,000 a year, and then we'll leave this, we'll turn reinvesting off again just to show you, and we'll leave that there. So at the end, you'll end up with 2.5 million, and you receive a total amount of dividends of 715,000. So that is quite a big chunk of this. That just shows you the power that dividends do have. You'd have contributed 480,000, so your dividends have paid more than you have actually put in, which is just nuts, and that is why it's so powerful. If you then click reinvest the dividends, this number then jumps up even more, and again it gets even more ridiculous, and that is the true power right there of the dividend snowball. Here it breaks down so you can see how much you get in annual dividends. So by year 25 you'd be receiving 40,000 in dividends, which is unbelievable. You go on to the 40 year and it's just ridiculous. You've got a portfolio of 4.4 million, you're getting 174,000 in dividends. What more do you want from life? It's just great. So you can see it starts off slower, not really anything to look at. This is why it takes time. The more time you have, the better. When it gets to the point where this is making more than you can actually contribute, yeah, obviously this is not completely accurate. There are things that will affect this. The market's not always consistent, dividends can change, there's so many different factors, but this is just a good overview of what can happen. When you get to the point where your dividends are paying more than your contributions, that's where it really takes off. Imagine the day when you literally can't invest more money than your money is making you. And then that money makes more money. It's a great world. You're probably thinking, but yeah, I still need to invest a ton of money to be able to do this. And yeah, that is kind of true. That's why I say to go and make side hustles, get some extra income coming in so you can do this type of thing. Also, you will have the dividend increases that will help you, the dividend growth, and then the snowball of that as well. Another reason people invest in these more mature dividend paying companies is because they are more stable and reliable. Great for people in retirement. We take Coca-Cola for example. Coca-Cola is drunk around the world every day and is the biggest drinks manufacturer in the world. On top of this, it's the 4th most popular beverage in the world, so it's got a very strong economic moat. Its stability is there, it just doesn't really have anywhere to go from here. All it can really do is maybe release more drinks, buy up other companies or other drinks that come onto the market. They have nowhere near as many opportunities to grow as things like Tesla. One of the other biggest advantages that you have with dividend investing is that you get an income. The only way you can make money with growth stocks is when you sell them, so you're not getting money anytime during that. Whereas dividend stocks, you can reinvest the dividends, or you can just take them. You can just use them whenever you want. Your position will still grow because of this stock growth, because of the dividend per share growth, and you can still just use those dividends for everyday stuff. I guess people just like the more tangible sense of the money. You can just withdraw it and use it when you want to. Now for the disadvantages. Now the biggest issue with dividend investing is that they can cut or reduce that dividend at any time. What the fuck? Literally, they could just be like, nah, and that would be literally everything you've been working for gone, really. If you put all your money in that company and it cuts it and you're relying on that, especially in retirement, bit of a problem. If you're not relying on the money, you can just move it from that company to another. It's not that big of a problem. This is exactly what happened with Walt Disney recently. They just cut their dividend completely. Disney said it was because of that global issue that I'm not allowed to say on YouTube, so it might come back, but we just don't know. Another disadvantage with dividend paying companies is that you will have less selection. Obviously you can just mix and match. If you want bit of growth, bit of dividend, you can do that, it's absolutely fine. But if you just go on purely dividend, then things like Tesla, Facebook, Google, all these companies you won't be able to invest in because they don't pay a dividend. Now this disadvantage depends how it goes. You will have slower growth definitely, but you might not have lower growth overall than a growth stock. Some of these growth stocks or SPACs or whatever you go in, they'll shoot up and then they'll just crash. This happens to a lot of investors, whereas dividend companies are more stable. They just grow consistently over time, as long as they do have a good economic moat and something that people still use, like McDonald's, like Coca-Cola. People still drink their stuff. It's not going to go anywhere, so the share price will just continue going up as more and more people are put on this planet. They don't get affected by the crashes as much either as some of the more speculative investments. My advice is always just to buy the dips, do what you're comfortable with, and hold to the moon.
The glorious house of gains, a place where life and death are meaningless and pain is gone.
And that's really it. Dividend investing is a long-term strategy. It can make you very wealthy and can get you generational wealth if you can stick to it. You won't see nothing in the starting years, but as the years go on, 5, 10, 15, 20, you'll then see the power of it and the allure that most people have towards it. The earlier you can start in this process, obviously the better. The longer your timeline, the more money you'll have, the less money you even need to put in to achieve where you want to go. God damn it, why did no one tell me about investing when I was in the embryo? Think of the gains! Nah, but for real, when I wake up and see the notification that I've just been paid a dividend, I've literally just been asleep and it's paid me money. Like, what more do you want? It's one of the truest forms of passive income. You just find a company, buy into it, and wait. And that's it. So I hope you enjoyed and got some value out of this video. If you did, I'd really appreciate it if you could like and subscribe. We are trying to build a community dedicated to self-improvement in every way. So if you're about that, you are in the right place. And as a reward, here's a cute picture of a seal. Check out all the links in the description and I'll catch you in a bit. Peace out.
Tell me pretty lies, look me in the face, tell me that you love me, even if it's fake.